Welcome back to Talk Tickers, listeners. You know, we love to deep dive into these earnings reports. And today, well, we've got Berkshire Hathaway's Q3 performance for you.
Always an interesting one.
Oh, absolutely. Especially since they don't do those classic earnings calls.
Right. Straight to the reports.
Exactly. So we're going straight to their November 2nd press release.
Right.
We've also got their 13F filing from August, plus some interesting commentary from NASDAQ, CNBC, and Reuters.
Sounds like we've got our work cut out for us.
We do. And, you know, one of the first things that jumped out at me, Berkshire Hathaway is sitting on a record $325 billion in cash.
Wow. That's
It's a lot.
It's a lot of cash.
Yeah, but here's the thing. They're not buying back stock.
Which, that kind of goes against their usual strategy.
Yeah, so that's one of the big things we're going to try to dig into today.
Definitely unpack that a little bit.
Absolutely. So, maybe you can walk us through some of the highlights from the earnings report.
Yeah, sure. So first off, they posted a net profit of $26.25 billion for the quarter.
Oh, wow.
Yeah, that's a pretty big swing from the loss they reported in the same quarter last year.
That's a huge swing.
Yeah, it is. But, the real headline grabber is that massive cash hoard. I mean, they're making money, but they're just
Sitting on it.
Yeah, they're sitting on it, not really spending it.
Okay, so we've got a mountain of cash. We've got, stellar earnings, but no buybacks. This isn't exactly the Warren Buffett playbook we're used to.
No, not at all. And it's particularly interesting because Berkshire didn't repurchase any of its own shares in Q3. That's the first time they've hit pause on buyback since 2018.
Really?
Yeah. And, it seems to go against their own stated policy, which is to buy back stock when the price dips below their calculated intrinsic value.
Right, so they think it's worth more than the market does.
Exactly. Clearly, they don't see their own stock as a bargain right now.
Okay, so if they're not buying back shares, where's all this cash coming from?
Well, the 13F filing, which shows what big investors are holding and a lot of the news reports, it all points to one answer. Buffett's been selling off stock. Yeah. Berkshire significantly reduced its Apple holdings for the fourth consecutive quarter, about 25% in Q3 alone.
Wow.
That's over $36 billion worth of Apple stock sold just this quarter.
Okay, so that's a bold move, even for Buffett.
Yeah, it makes you wonder what he sees coming, right?
It really does. And it wasn't just Apple, was it? I mean, there were reports about Bank of America, too.
You're absolutely right. Since mid-July, Berkshire has sold off a big chunk of its Bank of America stock, bringing in more than $10 billion.
See, this is what I don't get.
What's that?
I mean, what's interesting here is that Buffett actually injected $5 billion into Bank of America back in 2011 during the financial crisis. Now, over a decade later, he seems to be pulling back.
Yeah, it's
Does this mean he's less optimistic about the banking sector?
It's hard to say for sure, but it definitely raises some questions.
It does. So, okay, big question here. Why is Buffett selling instead of buying?
Well, a lot of the articles offer a few potential explanations, and one of the big ones is just this concern about market valuations. There's this sense that the market might be overvalued, and, Buffett, he's famous for his cautious approach. He doesn't want to overpay.
But the market has been on a tear this year. The S&P 500 is up over 20%. What's making him so wary?
Well, remember, the 10-year Treasury yield climbed back above 4% last month.
Right.
And that's making some investors, including, it seems like Buffett, a bit wary. And then there's all this talk about the ballooning fiscal deficit and the lack of commitment to spending cuts by either presidential candidate.
Yeah.
So these are all factors that could be contributing to his caution.
I see.
I mean, is he making a cautious bet? Is he waiting for a better buying opportunity down the line? Or is he signaling something, deeper concerns about the U.S. economy?
Right.
It's hard to say for sure.
Yeah.
But his actions, definitely raise some questions. He might be stockpiling cash, getting ready to pounce when valuations become more attractive. And it's also worth noting that, Buffett has hinted at potential tax increases on capital gains in the future.
Oh, interesting.
So selling now could be a strategic move to minimize his future tax burden.
I see. So it all sounds very risk-off, wouldn't you say?
Yeah.
Like maybe he's, battening down the hatches for a potential storm.
I think that's a good way to put it. Absolutely. And this cautious sentiment, it isn't just reflected in Berkshire's cash position and lack of buybacks. It also shows up in their operating earnings.
Oh, that's right. We haven't even talked about that yet.
Oh.
Remind me, what exactly are operating earnings and how do they look this quarter?
Yeah, so operating earnings, they give us a clearer picture of how Berkshire's businesses are actually performing, without the ups and downs of the stock market.
Right.
So things like their insurance business, railroads, even See's Candies, all that factors in.
Okay.
This quarter, operating earnings totaled $10.1 billion.
Okay.
That's down about 6% from the same period last year.
So not exactly a home run then.
Well, it's a bit of a mixed bag, actually. There were some bright spots.
Okay.
BNSF, their railroad business, actually saw profits rise. They shipped more consumer goods.
Yeah.
And then Berkshire Hathaway Energy also performed well. Their operating expenses declined, so that's good news.
Okay.
But yeah.
So where are we seeing the weakness? What pulled down those earnings?
Well, the insurance underwriting business, that was a major drag on earnings this quarter. They were hit pretty hard by a few things, actually. Losses on some older insurance policies, claims related to Hurricane Helene back in September, and even a bankruptcy settlement. It's tied to a defunct talc supplier.
Oh, wow. That hurricane damage alone must have been significant.
Oh, yeah, definitely didn't help. They reported $565 million in losses just from Hurricane Helene.
Wow.
And they're already projecting losses between $1.3 and $1.5 billion in the fourth quarter from Hurricane Milton, which, slammed into Florida last month.
Yeah. That's a lot of storm damage.
Yeah.
I mean, it really underscores the inherent risks in the insurance business, doesn't it?
Absolutely. It's a stark reminder that even a well-diversified company like Berkshire, they're not immune to unexpected events.
So are Berkshire's insurance struggles a potential warning sign for the broader economy?
It's hard to say for sure. Some analysts think it reflects a more cautious consumer spending environment, which could lead to fewer insurance policies being written. But it could also just be more of a sector-specific issue, related to things like rising claims costs, increased competition.
Yeah, it seems like every industry is facing its own unique set of challenges right now.
It really does, yeah. And Berkshire's retail businesses, they're another example. Almost all of them reported revenue declines this quarter. Even their Pilot Check stop chain saw revenue drop by 19%.
Really?
Yeah, partly due to lower fuel prices and decreased marketing volumes.
Wow. So is this the beginning of a downward trend for Berkshire's businesses? Or is this just a temporary blip?
I mean, it's hard to tell for sure.
It is.
But these results definitely raise questions about the sustainability of Berkshire's earnings growth, especially given the overall, risk-off sentiment that we talked about earlier.
It's true. And, it's interesting because Berkshire is like a microcosm of the broader economy almost.
Yeah.
And their performance gives us clues about what might be happening overall.
Yeah, I think that's a really insightful observation. Their vast and diversified holdings, they really do give them a unique window into the health of the economy.
You do.
Yeah, so these conservative moves, it could be like a canary in the coal mine.
Whoa, okay, hold on. Now that's something worth exploring. What exactly do you mean by that? What are you seeing that maybe we, the average investors, are missing?
Well, think about it. If even Warren Buffett, one of the most successful investors of all time, is feeling cautious and he's pulling back, shouldn't that at least give us pause?
Yeah, right.
It suggests that there might be some underlying weakness in the economy that we need to be prepared for. Maybe a slowdown or even a correction could be on the horizon.
Okay, I see what you're saying. So what do we do? Does this mean we should start selling off stocks and heading for the hills? Or is there something else we can do to protect ourselves? I mean, help us out here.
I don't think it's, quite time to panic just yet, but it is a good wake-up call, I think.
Yeah.
To review your portfolio.
Right.
Make sure you're comfortable with, your risk tolerance.
Okay, so basically a financial gut check.
Exactly. Are you overexposed to sectors that might be, vulnerable in a downturn?
Right.
Do you have enough cash on hand to weather a potential storm? These are all things that every investor should be considering right now.
Yeah. It's like making sure your financial house is in order before the winds start blowing.
Yeah, I like that analogy. And remember, diversification is your friend. I mean, Berkshire Hathaway itself is a testament to the power of spreading your bets. Don't put all your eggs in one basket.
That's always solid advice. And speaking of diversification, Berkshire's lack of major acquisitions, this is a curious puzzle to me.
Yeah.
I mean, they've got more cash than they know what to do with. Why aren't they making any big moves?
It's the question on everyone's mind. Some people speculate that Buffett's just waiting for the right opportunity.
Yeah.
He's notoriously patient, disciplined. He won't overpay just because he has money burning a hole in his pocket.
Right.
He'll wait for a deal that truly makes sense.
But there have to be some tempting deals out there, right?
Yeah.
Especially with valuations potentially softening?
I'm sure there are. I'm sure he sees opportunities. But maybe he's also concerned about the overall economic climate.
Hmm.
Remember, rising interest rates make borrowing more expensive,
Right.
which can impact the attractiveness of acquisitions. And don't forget, there's also the uncertainty surrounding the upcoming election.
Of course.
You know, those factors could be making him hesitant to, make a big splash.
Yeah, that's a great point. Election years always bring an extra layer of uncertainty. So where does that leave us? What's the big takeaway for our listeners today?
I think the overarching theme here is caution. Berkshire Hathaway's move suggests that the market, may be headed for a shift. It might be a good time to reassess your portfolio, make sure you're diversified, and maybe, build up a little extra cash just in case those metaphorical winds do start blowing.
Great advice. And speaking of uncertainty, let's touch on the elephant in the room, Buffett's succession.
Yeah.
At 94, his eventual departure is on everyone's minds. Does this risk-off approach, does this reflect his succession planning at all, do you think?
It's definitely something to consider. We know that Greg Abel, who's a current vice chairman at Berkshire, he's the likely successor. This period of, stock selling and cash hoarding, this could be part of a deliberate strategy to create a more stable and liquid foundation for the company, as it transitions to new leadership.
That's an interesting thought. Almost like Buffett is handing over a well-stocked war chest for Abel to use when he takes over.
Yeah.
Maybe he's setting him up for a major acquisition down the line. After all, they haven't made a major purchase since 2016.
It's certainly possible. With over $325 billion in cash, they definitely have the firepower to make a major move when the time is right. It'll be interesting to see what the future holds for Berkshire Hathaway as this new era approaches.
Well, one thing's for sure, this Q3 report has given us a lot to think about. It's a reminder that even in a seemingly strong market, it's important to stay vigilant, be prepared for potential shifts, and never stop learning.
Couldn't agree more. The market is constantly evolving. Staying informed and adapting to change is key to long-term success.
Absolutely. Well, thanks for joining us on this deep dive into Berkshire Hathaway's Q3 performance. We'll be back next week with another earnings breakdown. Until then, happy investing.